Well, we'll take this forward, and now in our next segment, Industrial Service SaaS Marketplace, Wendwiz has backed $8.3 million in a Series A round, which was led by Soren Investments with participation from several other investors, including angel investors. Now, with this, the total capital raised by the startup to date stands at $11.3 million. And joining us now to discuss this is Rajesh Reddy, who is the CEO and co-founder of Wendwiz. And also with me is my colleague, Arundhati Ramanan. Rajesh, thank you very much for your time here and for joining us here on Startup Street. If you could start by telling us, what are these product enhancement and team expansion plans you have? Now that you've raised this fund, you already have about 40 employees, I understand.
Yes, thank you for having me, Ritu. So currently we have around 15 plus clients whom we work with. When I say clients, it's large enterprises, manufacturing enterprises. And we have more than 14,000 plus MSME project vendors on the platform. The current investment which we raised will go towards deepening our relationship with the existing clients and also adding more features to the vendor engagements which we have.
All right. Hi, Rajesh. Arundhati here. Wendwiz is a SaaS-enabled marketplace digitizing CapEx and industrial services procurement, and you specifically focus on the manufacturing industry. Can you take us through what you have on offer? How are you creating value for your customers?
So if you pick any large manufacturing enterprise, they constantly keep investing into their own existing ecosystems or setting up greenfield projects for expansion. Okay, for doing these expansion projects, they engage with several large vendors for the projects, as well as a significant number of MSME players to execute these projects. Okay, we as a platform help these large companies find the right possible set of vendors for engagement and execution of the projects.
That you operate in, who are your competitors, if any, and what is the total size of the opportunity that you're trying to capture at Wendwiz?
So there are a lot of contemporary companies, Ritu, in this market. We have not really seen an exact competition in terms of whatever we do, like-to-like comparison, but there are a lot of companies who are addressing some parts of the same problem, but not really the same problem. And with respect to the opportunity size, we as a company see that nearly $80 to $100 billion worth of capex happens in the manufacturing and allied spaces in India every year. And we are working towards bringing more efficiency in how these projects are done on an year-on-year basis.
All right. Are there any new offerings in the pipeline? You're working on some pilots to strengthen your vendor side offerings, right? So, and tell us a little bit about that. And also, what are your best performing products and what's the demand you're seeing?
So currently our hero product is the discovery product, where a large enterprise is able to post an RFQ on the platform and is able to find the best possible pool of vendors for the job. Subsequently, we are looking at tools which will work towards making the engagement between these two entities better, the large enterprise and the MSME player. And post that, we are working on tools which will help them track the job execution better. So that's going to be the subsequent steps which we are working on. And we are already working on with some clients on pilot phase.
Rajesh, but largely if you could comment on the environment, because essentially you're saying you're working with SMEs, you're working within the manufacturing space. And if we had to go by the figures, the last quarter GDP figures, for instance, we are seeing continued weakness in manufacturing, and CapEx hasn't really picked up to the extent that it was expected to. How has that impacted your business in the last couple of years, and what is the sense on the ground? Is it really picking up now?
So with respect to that, Ritu, we are solving a very core problem which exists in the manufacturing ecosystem. And without Wendwiz or with Wendwiz today, already the scale of CapEx is already happening, and companies are looking to bring in more efficiencies in the existing scale of CapEx itself, which is significantly large. So whether that particular number is going to grow exponentially or a lot more is only going to be an advantage to us. But the current scale itself is a large enough problem to be approached by a platform like Wendwiz.
All right. And what about revenues, Rajesh? Where will you close this year? What's the road to profitability looking like?
So we are in very early stages of our engagements with the clients here. And at the same time, with respect to our engagement, we are already making revenue through our client subscriptions. Currently, we are working on the clients engaging with the vendors and going forward towards making large-scale jobs done through the platform.
All right, Rajesh, thank you so much for joining us on the show today. We're completely out of time and we wish you all the best going forward.
Thank you so much. Thank you so much for having us. Yeah.
On that note, it is time for us to head into a short break. On the other side, we delve deep into India's startups in the travel and hospitality space to understand what's working for them. Stay tuned for that.
Welcome back. You're watching Startup Street, and it's now time for a special series, the Unicorn Health Check, where over the past 1 month, we've created a report card of our most valued startups, delving deep into what is working and what is not. But today, we're going to look at India's startups in the travel and hospitality space, and Arundhati is standing by to give us those details.
The global travel and tourism industry went through a tough period during the pandemic, but bounced back quite quickly post the pandemic. The global market is set to surpass $8.9 trillion by 2026, growing at 3.1% CAGR from 2021 to 2026. The same can be said for India, with the Indian travel market expected to reach $125 billion by FY27. Let's now take a look at the startups in this space. The COVID-induced ban on travel hit hospitality chain Oyo pretty badly in FY21. However, the company was able to claw back some lost ground in the last fiscal. So let's take a look at the numbers then. Revenues from operations grew over 20% to come in at close to 4,800 crore rupees in FY22, while losses dwindled 51% to a little over 1,940 crore rupees. Employee benefits emerged as the largest cost head for Oyo, forming around 27% of the overall cost. Expenses totaled close to 7,000 crore rupees in FY22, and on a unit level, the company spent 1.46 rupees to earn a single rupee. Valued at $2.7 billion, Oyo plans to cut its IPO valuation by 2/3 when it goes public, as per a Bloomberg report. In a town hall held by the company's chief Ritesh Agarwal, Oyo said that it would reach 800 crore rupees in EBITDA by FY24. The hotel chain is now preparing to file a fresh IPO document as soon as this week, the report added. Next up, let's take a look at Ixigo, which is backed by the likes of Invesco, Sequoia Capital, Elevation Capital, and others, and is valued at around $500 million pre-IPO. Ixigo's revenues grew 2.8 times to 379 crore rupees in FY22 from a little over 135 crore rupees a year ago. A steep rise in employee benefits and advertising costs dragged the company into losses, which came in at over 21 crore rupees. The company had reported a profit of 7.53 crore rupees in FY21. With a 2.9 times surge in cost, the company's expenses came in at a little over 402 crore rupees. Ixigo spent 1.06 rupees to earn a single unit of operating revenue in the last fiscal. So while Ixigo has received approval from the market regulator to list on the bourses, the company is waiting for the right market conditions to hit the bourses now. Now let's take a look at the two profitable companies in the sector. First up, the market leader MakeMyTrip posted its highest ever operating profits in the December quarter on the back of a demand surge for leisure travel and improved consumer sentiment. The company turned profitable after it reported profits of $0.2 million versus a net loss of $9 million a year ago. The company's revenue stood at $170 million, and the travel aggregator is now thinking about an India listing and is currently listed on the Nasdaq. Meanwhile, EaseMyTrip, which is listed on the NSE, is backed by Nomura, HSBC, Sundaram Asset Management, and others. The startup reported a 4% year-on-year growth in net profit, which came in at 42 crore rupees. Now, revenue from operations surged 58% to 136 crore rupees, and the company's EBITDA for the third quarter improved to 59 crore rupees, led by healthy top-line growth and a persistent focus on operational efficiency. Now, the company's expenses stood at 82.5 crore rupees. Now, trends suggest that travelers are back on all travel segments, including leisure, business, pilgrimage, and corporate events, and this will drive growth in the coming years as well.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side.